beyond them to I pause right there. Get you
Yeah,
beyond
you
them. I gotta keep
just gotta
fucking
keep
rolling
flowing with
it
it.
off. Yeah. All
Yeah.
right. All right. Welcome everyone to another episode of Beyond Your Beliefs, where we help you bring. Fuck, bro. This shit's fucking hard. I don't know how you do the fucking outro the same exact way every day. Welcome everyone to another episode of Beyond Your Beliefs, where we help bring awareness to your current beliefs and get you beyond them to experience a reality you truly deserve. And so today, as always, with me, Matthew is here with me on another episode. We're going to be diving into a little bit of what we dove last week. If you haven't revisited that episode yet, I highly suggest you tune into it. We would start talking about the psychology of money, everything that's been brought to our experience and our awareness throughout our experiences and throughout the accumulation and distribution of wealth that has came throughout our journey. And so today, what our main topic that has brought to my attention is is I see a lot of individuals and a lot of us come into this industry with the objective or the outcome of wanting the result of financial freedom, of income, or a lot of people, myself included, came into this industry wanting to be like stinking rich. I wanted to get stupid rich. I just wanted to be wealthy, and to the reality of it, I didn't really. I said to myself, I didn't really care how long that took, and so we're going to. I want to bring to your awareness that commitment that we made the day that we decided to take on this journey. That's a huge. It's. I personally think it's a pretty big commitment when it comes to investing. A lot of individuals, a lot of the mass majority of individuals will come on board and will begin doing Robinhood investments, stock investments, crypto investments, your very typical first investment type of deals. And personally, I never really got into stocks. I have traded stocks. I never really have gone into stocks to that point. But what I've noticed is like most people came into this industry wanting to make quick cash. And so when you come into the investment field wanting to make quick money or with the expectation that you're going to get rich fast, I feel like that approach can be very detrimental at first, not understanding all of these factors in the market, understanding the bearish cycles and the bullish cycles of the market, understanding the longevity of the long-term journey that you have just started or opened the door to. And so when you have this short-term outlook or this short-term expectation from trading or investment, it can be very painful when you don't see those results consistently. It doesn't mean that you won't see those results. It's just that you won't see them that consistently. And that's a pretty big thing that that happened to me. It's like I saw results right off the bat. I saw the possibility of what I could make. And this is one big factor that I feel like is not discussed about enough when it comes to investments. Luck. Like the sheer luck that you were at the right place at the right time on the right side of the market when you first started doing these things. And the best example I could give you guys is the bullish run in crypto of 2020, end of 2020. That was probably the best example I could give you guys of all the individuals, the mass majority of individuals that took their stimulus, threw like 50% of it, all of it into a crypto market, into a coin, into Shiba Inu. Like I know that you, Matthew, you remember when everybody was telling you about Shiba Inu, about these coins of people that never even touched the markets or traded in their life are making now. We're making money. Like I had friends that never really traded ever and made a couple thousand off Shiba. And so it just comes to show you, you just, as long as you're in the right place at the right time, there is a random distribution between wins and losses. And so there is a factor of luck that goes into this whole investment. Now, it's not the only factor. There's many factors, but it's one of the factors that it's a very invisible factor that I believe is in play. And that happened to me. I experienced luck at the beginning of my trading career, and I had very short-term outlook, so it kept me hooked to coming back. I don't know if you had a similar experience with luck at the beginning of your trading career, Matthew.
Yeah, the very first trade actually played out pretty well for me. So uh, I got lucky. Yeah, beginner's luck, I guess.
Yeah.
It's funny actually. It was literally $500 account and dropped a standard lot on Euro USD and like it moved 50 pips, whatever. I didn't know how to calculate pips or anything at the time. I was just gambling, and yeah, I got lucky, right? Like it just moved and doubled my account, and then I blew it the next day. So yeah, no, beginners like I think it's just what you said, being at the right place at the right time with the right people, you can really set yourself up for really solid opportunities. Like you're talking about Shiba, for example. Like I was one of those people telling everybody, like, yo, like buy this thing, and it flew, it popped off, and people who literally have had no prior knowledge were able to come in and take advantage of that opportunity. But
Huge.
again, it's like it's not about what you make, right? It's what you keep. It's not about what you could do once, right? Anybody could do it once, but like exactly what you said, what can you do consistently? So that the financial industry, the markets, it really is a bait, for people who have a short term mindset and want to just make
Mm,
money quick. And we've all been there. We've all had that mindset to where it was
facts.
like, I want to, I thought I was going to become a multimillionaire, like, the next week when I first
Yeah.
found out about all this stuff. It's like, okay, these things require real studying, real skill, like just like anything. People go to school to learn how to be surgeons and stuff. Like, you want to learn the financial markets and how to position yourself. Like, you really got to study and you got to learn from people who have done these things. And yeah, so it's like it's a real business. So there's definitely like the gambling side where it's like, you just YOLO stuff, because someone tells you to buy it or whatever. And it's like really your confidence over time builds from just doing that thing consistently. So I think it's a blessing for a lot of people, right? Just like us, like we got lucky in the beginning because you see the potential,
Yeah.
right? It's like you see that dollar, you can make it through the internet, and it's just like, like you can't
Facts.
really go back because it's like, okay, well, if I could do this from just getting lucky, like what can I do if I take it serious and really dedicate time to actually being consistent and profitable? Because there's people just like us who, just picked up a skill and became great at it, all over the place. There's examples all over the world. So I think it's a blessing. And even on the other side, it's like when you take those losses, that's kind of what separates people, where it's like some people will just be like, oh, F this, like it won't work. Like, but again, it's like that's really a test to see, like, okay, like you're either gonna see it through or you're not. And I think the thing to understand as well is that like what we do is not for everybody. There's you guys have heard of the cash flow quadrant. Like most people never get into investing, right? So it's really yeah, there's a lot of opportunities, and it's really cool that you mentioned that because you really could just be at the right place at the right time with the right people. That's why I believe networking is so important. And they say things like your network is your net worth because you don't need to be the best trader or the best investor. But if you surround yourself with people who are good in their industry, in their niche, in their skill, well, you could leverage each other, right? We talked about leverage on the last episode, and leverage is so important because like for example, like I have family members where like they knew nothing about crypto, none of that. March 2020 came, I told everybody, yo, go buy Bitcoin, right? And you guys know what happened. So it's like I do believe it's like not everybody will has to dive into this. It's like you diving into this and you taking it serious, you could really help the people around you, right? They could leverage you. You could be that leverage, right? Because just like us, we surround ourselves with people, right? Right place, right time, right people. Opportunities present themselves, and now you are that beacon of opportunities for other people. So, yeah, I think it's very powerful, right? So you could really people could leverage you. Very powerful.
And
That's the beautiful thing. Sorry to cut you off, but that's the beautiful thing about like these markets and opportunities is there's so much liquidity out there that there's opportunities for everybody. Like we could all literally participate and capitalize on the same opportunities. So that's what the beautiful thing is about like what we do.
I just want to bring it back to what you said. It's the market or this industry can be a great inducement for individuals with a short-term outlook. A great what was the word that you used? I don't recall what that word that you used exactly, but you said that it was a very good way to induce anybody with a short-term outlook, and I think that's so true. Somebody with a short-term outlook will won't hesitate to come into an industry like this, knowing that they have the opportunity to make quick or flip their equity. Um, a lot of us don't understand that risk. So there's two risks here that we're taking. So there's the individuals that's taking the risk for making the investment, and which is the risk that I encourage, or there's the individual that's taking the risk of not taking on investments, not taking on this industry, and taking on the risk of not ever finding out what investment is like or what it can do for you. And so there's an invisible risk right there that
It's called a opportunity cost,
the cost of yeah, the opportunity cost. And so
missing on opportunities.
when every time you say no to something or you say yes to something, you're simultaneously saying no to something. So that when you say no to investing, you're securing a nice, safe, and more than likely a very steady build of income. Okay. But when you say no to investing, you're saying yes to safety, yes, but you're saying no to a great way of opportunities of making multiple sources of income, having the opportunity to leverage other individuals in that industry, but not just that, but leverage your income to the point where your money's working for you instead of you working for your money. And that's a big like mental shift, I believe, that happens when you dive into this industry is okay, cool. Like there's ways to make money and it doesn't have to involve 40, 30, well, let's say 20 plus years of my life of devoting into some industry, company, business to develop this level of income. And once you realize that, hey, like there's other opportunities to make that level of income, to make a doctor's salary, to make an engineer's salary, to make all these professional athlete salaries, there's an opportunity for you to be able to generate that without having to devote your entire life into it. And I would say I personally am devoted to this industry for life. I feel like investments is something that you would develop. But if you're going to devote your life to a business, to somebody else's business, if you're going to devote your life into a job or a career, wouldn't it also be okay to devote your life into learning about money, where it's coming from, where it's going, why there's more of it sometimes, why it feels like there's a lot less of it at other moments. Understanding where to put your money when you do acquire it, how to keep your money when you do win, how where you can win bigger, where you can win in a more steady way. And so all of these factors come into play, and it's all about how you approach to it. So whether you come in here with a long or short term perspective, long term investors, or when you look at a career in the long term, it's about looking at investing as a career. It's a long-term career and journey that you step into. And it's not necessarily that you have to do it full time, but you just have to have a long-term outlook on it. You get to have to build this long-term portfolio, and it doesn't necessarily, it's not going to necessarily be a bunch of like wins, 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 wins. It's I've learned the very the very in a very difficult way, challenging way, that most of my portfolio was devoted at least like 50 to 60% losses. And it's about and most people will wonder like how do you stay in the game so long and lose so much? And the reality of it is like being having this long-term outlook. I understand that no matter how much I give to the market, no matter how much I've had losing positions, I can always make that back 10 times fold. I could always make that back 10, 100 times, 50 times fold. And it's because I have this long-term outlook on it. And it's because I understand that I can lose more than I win and still make more than than I've ever lost. I'll still make those. It's not about. It's like I'm a look at yourself as a painter, okay, as an art an individual that buys art, okay. You guys ever wonder how art gets so expensive? How these assets acquire so much wealth, so much value? It's not because one person just happens to buy one painting and that one painting just popped off and then like, oh, like I'm now a millionaire, billionaire because of this one painting that I bought in my life. Maybe that can happen. That's where luck comes into play, right? That maybe you're that lottery winner. Cool. But most arts were bought out by collections. Like people collected a whole collection. Like somebody bought 100 paintings. Out of those 100 paintings, like 40 to 50 became worth more than they were acquired for. And then 30, 20 to 30 were doubled in price. And then there's like one or two that like 50 times, 100 times the value of what they were acquired for. But it's not that somebody just bought that one painting because they knew that one painting was gonna just boom, blow up. Like this is it. Like how many people say those things and then it does those expectations, that short-term outlook doesn't have, it brings a abundance of disappointment. But when you acquire things in the long term, you're just like, okay, I'm gonna buy this whole collection and I'm gonna hold it for the next 20, 40 years. And I'm gonna acquire within those 20, 40 years, I'm gonna acquire multiple collections and I'm gonna have multiple outlooks and I'm gonna have a lot of more losses. But it's those wins, it's those few wins, ones, twos in the long term that make up for most of the losses and most of the profits. It's a very interesting thought, but that's really how this whole thing works when it comes to investing, long term versus short term. Matthew, I don't know if you want to add a little bit into that, and dive into what it means to be right and wrong when it comes to the market, and how do you perceive that information.
Right. Yeah, I think it like it just shifts into a whole different way of thinking, right? Mm. Like you really think of, school, for example, and kind of like how we've been taught. It's like, if you get five, 6 out of 10 wrong, like you're kind of a failure, like you just fail, right? So
Oh wow,
it's
yeah.
like shifting that mentality and again getting introduced to like investing in business and stuff is, it's not about being right all the time, right? It's about being wealthy people. If we're talking in terms of wealth, have really failed, right? Have taken a lot more losses than most people are even willing to try, right? They say billionaires invest millions, right, to become billionaires. Millionaires invest, hundreds of thousands to become millionaires. And you know, broke people, broke is a mindset. I truly believe being broke is a mindset, right? Are those who want to invest nothing but expect to become wealthy. So it's like, you take the risk or lose the chance. They say again, like, no risk, no Rari, right? So
Yeah.
it's really letting go of that fear of loss. And we've kind of been programmed, like as a child, to like, if you're wrong, like it's a bad thing to be wrong. When it's like you get introduced to risk to reward, it's like, well, within a series of 10 opportunities, if you're going for a 1 to 3 at least, you could lose 7 out of those 10 times, 8 out of those 10 times, and still be, in profit, still be above. And it's just a whole nother way of thinking, right? Where instead of exchanging, again, you could, I believe jobs are very important, and, investing is to supplement that income. So it's like, it's just another way of thinking, like value, right? And there's time, and many times, right, a lot of people think time is money, but in reality, like time is far more valuable than money, right? Because money, you could lose it and you could get it back, right? It's a physical thing. And with time, like again, you could drop $1 on the ground, pick it up, right? You can never drop a minute, an hour of your time and get it back. Like it's really like
That's so true.
disassociating those things, because time is the most valuable thing, and perceived value is really what it is. And it's really thinking in terms of probabilities and opportunities. And I really think that, again, are just based off studying and from experience. It's those who are willing to take more risk, those who are willing to invest more, eventually just become more successful, because it's a numbers game. And when you understand that it's a numbers game and it's a game of probabilities, well, then you're not afraid to fail, right? Letting go of that fear of failure allows you to just continue moving forward, right? And it's, we talk about equity curves a lot and having them go up. So it's like, you're again, exactly what you said. You could lose more than you win in terms of opportunities, but in terms of wealth, you could accumulate more than you've ever lost, because the opportunities that you're taking are such high quality opportunities that any losses you take, it just outweighs all of that. So yeah,
Facts.
yeah,
Yeah.
risk to reward.
Yeah. Yeah, that's so true. It's like most individuals, and we were taught a lot about this in school. It's like you want to avoid being wrong. And when it comes to investing, it's very much the opposite. It's you don't want to avoid anything. You
it,
just
you
want,
it really like shatters that belief. I always say, like, on the streams too, when we're streaming for New York Open, it's like, I'd rather take a loss participating than being on the sidelines, like, man, I shoulda, coulda, woulda done
yeah,
this. Like, just personally, I'd rather take a loss, like, participating, finding out, than being on the sidelines because I was afraid to take advantage of the opportunity, and being like, man,
facts.
if only I would have done this, if I shoulda, coulda, woulda, right? Which
Yeah,
are dangerous words.
right. And it's all about how you perceive being right and wrong. Again, I grew up in a very competitive sports environment. I was huge into sports where losing was not like the best option, and you didn't want to come home with a L. Like you always wanted to come home with a dub, and when you came home with a dub, it was the best feeling. And when I used to lose in like soccer matches, like I used to get upset, like pissed off. I'd be like, man, losing really meant like the worst thing to me at the time. And that was what a belief system that was implemented through me for years and years and years and years, that fed into my mind, like all my years through middle school, high school, always being fed like, don't be wrong, avoid being wrong, and avoid losing. Okay, so it's the fear of loss that has been implemented and reprogrammed again and again and again into our subconscious thinking. And it doesn't necessarily have to be with sports in school. It could be with anything. A lot of people. What is one of the really well-known sayings? It's like if you weren't first, then you're last. It's like how many times have you heard that saying? It's like
Ricky
it's such.
Bobby.
Yeah, Ricky Bobby. Yeah,
That was
yeah,
nice.
you know exactly where I got it. It's a very
Shake and bake.
famous quote. It's a
That's me and
famous.
you on New York session. We're doing the shake and bake.
if you're not if you're not first, you're last. And it's like, dang, like that is a really well-known mentality. It's something that a lot of people like live by when it comes to their day-to-days. They were so competitive with other individuals when in reality investment world makes you realize that long term, it's you versus who you were yesterday. It's you versus the mistakes that you previously made. And it's you versus just you. Always. Always. And comparison will always be the thief of joy. If I sit here and compare my wealth to Warren Buffett, I will be miserable and just, I diminish my confidence. But as I just compare myself to where I was last year or where I was at the start of this, where I was 3 years ago, where I was even 6 months ago, it's totally different from where I'm at today. It's a growing and it's a me versus me versus who I was last year, me versus who I was yesterday. That's all I really ever focus on is is I don't want to ever compare where I'm at currently to anybody else's other than where I was last year. So yeah, yeah. Anyways,
Yeah, I think because I definitely was that same person. Like, and I'll be honest, like even still to this day, like it's like accepting losing is something that is it's a process, because like you expect so much greatness from yourself, and it's like you have all these the self image and like these things, and like I guess you can't win them all, right? No such thing as like a perfect person. Like for
yeah,
example, right? I personally haven't been watching too much sports lately. But I do dabble in like sports betting and stuff. But I became an Eagles fan, like Philadelphia Eagles fan in '08, right? Because of Mike Vick, Deshaun Jackson, and Sean McCoy. And it's because I played Madden. The team was just like overpowered, right? And like I never, that thing where it's like to this day, like I swear, like I never really took an L in Madden, right? Like and like just because I played with that team, and yeah, I haven't played any of like the over the past few years. Like I haven't played, so I definitely probably get clapped. But again, it's like I've been keeping up with the team currently, and like they were 8-0, but they just took their first loss yesterday. So just like that team, it's like especially when you're so used to winning and like you take a loss, it's like what can you do with that information? And it's really how you perceive your losses, right? It's like what you do with the information. Because at the end of the day, it's all feedback, right? And having that mindset when you see things, certain experiences, whether wins or losses, again, you get to perceive whether that's good or bad. So it's like really perceiving that just as information, and what you choose to do with that information determines how you grow, right? So I truly believe, again, like going from, especially like with COD, I would hate losing, like I would hate that stuff. Like I would rage, I'd get pissed, all of that. It's like you really like trading, you get thrown in this environment, it smacks you around, and like it really humbles you. It's like, yo, like you have to sit, and you can't just be emotional when you lose. Like you have to look at the information logically and see where you went wrong, right? Like what you can do better to improve. And I think what this the financial markets really shows you is how to accept losing to move on, right? Because the thing about winners, right, the thing about being a winner is they don't avoid losing, they accept it. And that was like a huge breakthrough, was like, okay, like instead of being afraid of losing and avoiding losing, you accept it. Because the way we see it is, the way I see it is, losses are again opportunities to learn and to become better. And at the same time, in this industry, in this business, that's like your tuition that you're paying, right? It's like you're paying for those lessons. Like
mm,
you're paying for these lessons. And the way I see it again is like any losses you take, it's just the market holding on to it, until you're ready to receive it at a later time in a greater quantity. So it's like really perceiving your losses as lessons, and really seeing it as an investment for your tuition for this journey that you're on.
the
I think
cost of making an investment,
the cost of doing business, right?
the
That's
cost of doing
exactly what it
business. Yeah,
is. Just like any business, you got to invest, right? Like again, there's a lot of businesses you could start with no money, all of that. But if you want it to grow, if you want to expand it, you got to
yeah,
reinvest back into the business. Like that's
facts.
the only way to make it grow, and all of that. So yeah, I think being able to accept losing that's really where you become a winner, right? Because most losers never become winners because they avoid losing, while the winners are just the ones who accept losing as part of the game. And that's why they become better because they take those lessons as opportunities to grow and become better so that their losing percentage, their losing ratio becomes much smaller, right? That's
Yeah.
why you have, world champions. That's why you have high performance athletes. That's why you see people winning medals like all the time because like they are just continuously, going after a craft and they're learning from those lessons to become better. And then you become great, right? So
You fell forward in a sense. It's like being incorrect. It's not about how much you make in the long run. It's truly about like being being in the game long enough so you can experience those gains. It's about being in the game long enough to experience, because at the end of the day, like I've said this a lot lately and it's been really stuck to my head. It's like there's a random distribution between wins and losses when it comes to investment. We never know what's going to happen in the world. Nothing is ever, no result is ever guaranteed. And so when you look at it that way and you see how you can fail forward, it's about the way that you fall and you fail, whether you fail and you give yourself enough room to breathe, because at the end of the day that's all you need to learn how to invest, is to by doing it and giving yourself enough breathing room to make those errors again and again until you learn the lesson that you need to for that in that moment. And so it's about being in the game long enough for you to understand these things and not putting so much pressure on yourself throughout. This is supposed to be an enjoyable, just like any career. It's supposed to be enjoyable. It's a good time. It is a good time. That's not. It's not that it's supposed to. It is. It is a good time. It's two. It's no wonder like two people can, a group of like 10 people can look at the same trade, all take the same trade, and all come out with a different outcome, feeling, and emotion. And it is because the way that they all perceive information. One person could have taken that same exact trade. They all closed out their trade in the exact same place. One person is really happy with their day. The other person is wondering how they can do better. The other person is wondering why they didn't get enough. The other person, and we all think in different perspectives, and it's going to be your trial and error that's going to bring you awareness as to what you need to do moving forward. And it is your cost of doing business versus somebody else's. And it's always going to be, again, your cost of doing business that's going to acquire those lessons. And of course, you can acquire mentorships and you can acquire different investors, other people that can guide you throughout this journey. That's something I highly always suggest, to go that route. Go to the people that have already made the mistakes that you're about to make, and crunch down that time frame of your learning curve versus where you actually start accumulating wealth over the period of time. I always say it's like you can learn yourself, which is some people really just have to fall on their ass themselves. I'm that person. I had to do that. I was very stubborn coming into this journey. I wanted to make my own strategy. I wanted to come with my own approach. I wanted to do all my own things, and I didn't realize that, hey, like there's people that have came through those thoughts. It's not that that thought was born with me. Those thoughts that I picked up a thought, that thought that somebody else tossed away, and I picked it up and tried to run with it once they were already. But once I realized, like, hey, like this, I'm not the only one in here in this journey. I'm not special to the market. That is said respectfully in all sorts of ways. It's like the market doesn't pick and choose favorites. It the distribution between wins and losses is random, and so it's about applying yourself every single day. Applying when and the opportunity shows up, take it. Apply yourself with consistent risk every single day. And since the distribution of wins and losses is random, and you never know when you're going to get that big, huge trade, or you're going to buy the Picasso's freaking painting 20 years before it blew up, you never know when you're going to catch that trade. You just don't know. And so that you just have to show up every single day, right? You show up, you do what you're already doing, implying this your edge, and by law, you will experience wins. And by the longevity, you will being in the game for the long run, you will experience gains. And so,
It's
uh,
but I'm sorry. Do you
oh
wanna?
no, yeah, go ahead, go ahead.
So how it goes exactly? I can't really remember right now. They say intelligent people learn from the mistakes of others, and or wise people learn from the mistakes of others, and just I guess dumb, stupid people, right? They learn from on their own mistakes, right? They learn from their own mistakes. Again, you cut the learning curve when you're able to learn from people who have what you want, and like you really just you know you could learn what not to do, right? And that just saves you so much time. And I back to pretty much what you're saying as well with giving yourself room. I think that's so important, especially with this skill. Like if you are under a lot of stress
Yes.
and you can't even afford like living expenses and basic necessities and stuff, uh, I just don't think that's a good environment mentally, or just there's just like a lot of stress there, and you're in a state of forcing things and trading emotionally because you feel like if this doesn't work, well then like you can't pay your bills and stuff. So I personally I just think that's giving yourself enough room to participate is is really key, because if you're putting everything into it and you're that's pretty much gambling. Like you're just relying on this one trade on this week to go well so that you could be good. Just like really understanding your portfolio and having your expenses, and then having like a sample size that you could grow with, that you can learn with, something that you could be comfortable with, investing and compounding. Because again, if you're really thinking with a long-term mindset, you're focused on compounding your wealth, right? Anybody who's
Right.
thinking with a short-term mindset, they just want to flip the bread, like they're thinking in terms of dollar amounts, when like truly investors are thinking in terms of percentages, right? What's the ROI? What's the return on investment? Right? And they're thinking in terms of percentages, because I truly believe thinking in terms of dollar amounts is very limiting, right? Like when I have students come to me, or like anybody share like, oh bro, like I had a 3K day, and I'm like, well, cool, like was the risk reward? Like was how much percentage is that of your account? Like oh, like 400%. It's like, bro, like you're over leveraging, like congrats, I'm very happy for you, that's lit, like that's awesome, right? But again, it's what's very powerful, and this is real why I bring this up also, is because there's dopamine involved with certain experiences. And again, anybody could do that, right? Anybody could do that once, but it's like, what is sustainable? Like what can you do consistently to take small losses and big wins? Because in reality, when you're investing, when you're trading, there should only be four outcomes, right? Or when you're investing in a business, when you're investing into, again, markets, into anything, right? The four outcomes should either be a small win, a small loss, a break even, or a big win, right? In reality, you should never really be taking a big loss, because that's how you stay in the game long term, is following those principles. Where you're investing, you're either taking a small win, a small loss, you're breaking even, or you're taking a big win. And really thinking with that long term investor mindset allows you to compound your wealth with the opportunities that you're taking, really cherry pick the opportunities that you're taking, and really taking into consideration, with the quality of it, really doing due diligence into things you're investing in, not just throwing money all over the place. Because
Right.
yeah, like money is abundant, right? It's all over the place. There's an infinite amount, more than enough to go around.
Yeah.
But being responsible with it is what keeps it coming to you, right? So it's like your relationship with it. If you have a relationship with someone and you're just reckless with it, like let's say a significant other, like there's no care, no genuine like love and care, wanting it to grow and succeed and do all these things, well then your relationship with money is like it's going to be the same way to you. So if you just are out here treating it like it's whatever, then it's going to treat you like you're whatever, and it might not come around as much. You know, it might come around every once in a while. But again, it's like being consistent with that relationship is what will grow, what will compound. You know, it's like putting, like, you don't want to put your significant other in extremely high risk situations. Like, why would you want to do that? You know,
Right.
you see a long term vision with this, so you would want to grow it, and you would want to have it in an environment where it's able to be nurtured and to grow. So having that same mentality with your portfolio is very important because over time, you know, you'll reward yourself. They say you either pay for decisions that you make or you get paid for decisions that you make. And the things that you do consistently over time, you will only be rewarded in greater quantities for the things that you do consistently over time. So this is why we say it's so important to have a long-term mindset because you know there will be years where moments happen, right? You may feel like, oh, things okay, I'm in the middle of this, not a multi-millionaire yet, whatever. But then after years, you know, there will be moments where years happen, right? So there will be years where moments happen, and then there will be moments where years happen. And that's just the compounding effect of the decisions, of the things that you've done consistently over time, adding up to those wins, right? Because again, thinking in terms of dollar amounts, I believe is just very limiting, right? Someone would say, "Oh, I had a 3K a day, cool." You're thinking in terms of percentages, right? If you're doing 3% a day or 3% a week, the dollar amount is only increasing, right? If you're thinking in terms of the dollar amounts, well, then that's still going to be that dollar amount. Well, you know, 10% of 1,000, you know, that's $100. But then when you're over time, you grow your account, now you're trading 100,000. Well, now that 10%, you're making 10K, right? On $1 million, now you're having six-figure days. So really having that mindset, thinking in terms of percentages, allows you to have that compounding mindset because when you allow the wins to get to you and the losses, it's an emotional roller coaster, right? It's like being able to stay level headed through the wins and through the losses because things are really cyclical throughout the entrepreneur journey. You know, for at least from my experience and, you know, studying people who made hundreds of millions or, billions, whatever, I truly don't believe it's like you get to a destination and then you're there. I believe, everything's moving, the entire economy, the world is fluctuating, and so are you and your relationships, and everything actually matters. So it's like throughout the extremely good times, that everything's temporary, right? So throughout there's going to be extremely good times, and there will be times where things aren't so good. But it's like, what is your mindset? How are you throughout those experiences, right? Because things can't be extremely bad forever, right? Things can't be just okay forever. Things can't be like the greatest forever. Things are cyclical. So it's like, where are you throughout these experiences? Because if you allow money or you allow these results to define you, and that's like your only identity. If your only identity is like, oh, like you only feel good about yourself when you make money, then like you're just gonna have an empty hole, a void that's just gonna need to be filled by money. And I think when you become greater than that, and you don't allow your results to determine like how you feel, even though your results tell the absolute truth about you and who you are, it's like when you don't allow something outside of yourself, like the numbers on the screen or anything, to, you know, get your dopamine or your emotions going, then you have true control over yourself, which means that's where you have the ability to control everything else around you, right? Because if you allow those results to control you, well, then you're just a slave to money. And again, the objective is to have freedom, right? So it's like not falling in that trap is is key. So just keep
Where
going.
you're like you're consistently chasing the bag, like you're enslaved to the bag instead of making money work for you. It's like you're just consistently working for it. And it's yeah, it's that can be a very endless cycle. So
Mm-hmm.
it's, up to you, every single one of us, to break those cycles, to break these generational curses that have been set upon our beliefs that shape our current realities, that are shaping our current results. If you want your results to change, you have to change. If you want your current self and your current state to change, then you have to change yourself. And so the best way to do that, my suggestion is for anybody looking to get into this industry, get started today. Don't wait for any amount of capital to come out, any some amount to show up to your doorsteps or to show up into your bank account to get started. You don't need a lot of money to get started with investments. You just, as long as you focus on capital building first, and I mean capital preservation first and capital building second. That was
Mhm.
always going to be the order. Capital preservation. Capital preservation will help you stay in the game long enough for you to experience the upside of this of this industry. So, um, yeah, I think we're gonna wrap it up right there. Call it good, and we got a couple more pointers to touch up on money, and we'll catch you guys, of course, on the next episode. So please, guys, comment down below any questions, comments, or observations that you guys may have made throughout this episode. If you guys have any topics that you guys would like us to go over, any topics that you guys would like to see more episodes on, please go ahead and comment down below. Please do share, subscribe to it, and send this to anybody who may take uh, benefit from the information shared here today. If you've had a breakthrough, if you had any realizations, do make sure to share this information with other individuals so they too have those realizations and are able to share with you as well. So with that, guys, we're gonna wrap it up. We appreciate you guys being here today. Matthew, if you don't mind.
Yeah, guys, again, we really appreciate you guys taking the time to be here, and we're really grateful for this opportunity. So again, if you gain value from this, definitely, feel free to share it with others. And yeah, definitely let us know in the comments, just like Bash said, any topics, anything you'd like us to go over. But as always, we really just, want to remind you that you can literally be, do, and have whatever it is that you want, right? Remember, you do not need to have something in order to do something so that you can finally be something. All you got to do is just be that person who does the things that person does, and you will continue to experience everything that person has, right? So, with that being said, as always, we're sending y'all waves of peace, love, abundance, and creativity. Y'all clap easy. And yeah, trade responsibly.
Peace
See
out,
you guys
guys.
soon.
Have a good one.
Peace.